Hi traders, hope everyone is doing well. Welcome to my video on the volume imbalance indicator. So in this video, I'm going to show you a simple strategy that you can use to help you capture moves such as this one for over 400 pips. This is the MT4 MetaTrader 4 trading platform that I'm using. I've got the indicator here displayed below my chart. If you don't already have the indicator in your platform, just a quick search and you'll be able to find it. And then you can just simply load it onto your chart and it will display below like this. Okay, you can use this strategy on any trading instrument, so Forex, stocks, commodities, cryptos, indices, etc., and any chart time frame. I'm using a euro dollar 1 hour chart. I prefer the higher chart time frame, so 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find the signals tend to be much more reliable. Okay, that doesn't just apply to technical indicators such as this one, but also price action analysis, support resistance, trend lines, candlestick patterns, so on and so forth. So the first thing to do is we draw our support and resistance. So we have our resistance up here. Okay, nice triple top formation there as well. Okay, and our support, open to interpretation, but let's just say our support line is through there. Okay, and you can see this triple top formation is actually lower highs as well. Okay, triple top because the resistance has been tested 1, 2, 3 times, and we have a level of support within this, perhaps here somewhere. Okay, within this triple top formation. As I said, this is a 1 hour chart, so these levels tend to be more reliable from my experience when it comes to support and resistance, that is. And we also have a level of support here, which you can see when it was breached actually held up well as resistance. And then this support level was breached, held up well as resistance. You can see tested multiple times there. And we could have actually taken a nice breakout trade from this ledge here. You can see nice bearish price action. Okay, you've got 3 inside down candlestick pattern there. That's a bullish candle followed by a bearish candle. That's at least 50% of the bullish candle, followed by another bearish candle which breaks below the low of the original bullish candle. So that's a good bearish signal. Same here, another 3 inside down pattern, bullish, bearish, bearish. Okay, we also have the market making lower highs. Okay, so it's safe to say around here, we know we've breached support there, support there. They've both held up as resistance now. Market's making lower highs, bearish candlestick patterns. We're pretty much on for this downwards move. And we haven't even looked at the volume indicator yet. Just emphasizing maybe for you there that you don't need to always rely on technical indicators. If you know what you're doing in terms of price action analysis, you can also create a good trading strategy. And of course, good money management. So talking of money management, on this breakout here, stop loss above the high. I would place my stop loss above the high here, so around 15 to 20 pips, which is excellent when you consider there's hundreds of pips on this move all the way down. So if the price dropped here, I'd move my stop loss to break even because we don't want a winning trade to turn into a losing one. If the market did continue back up this way and take us out, it would be break even. Okay, but as price continues to drop, we just move the stop loss from break even to above the recent highs, above the high, 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 and just lock in as much profit above the high as possible. Okay, I like to maximize good moves when we get them. Last thing I'd want to do is have, say, a 15 pip stop loss, see price drop, I don't know, 40, 50 pips and just get excited and exit the trade there, just exiting way too prematurely. When we capture good moves, we want to milk them as much as possible. Okay, so I won't have a fixed take profit. I just trail as much as I can, and that way, even if we have multiple stop losses of 15 to 20 pips, doesn't matter because we know eventually when we do land a big trend like this, we can make back those pips and then a lot more on top as well. Okay, so I've waffled on a lot there without even looking into this indicator. Again, emphasizing the fact that price action and good money management can reap rewards. But that being said, let's look at the indicator now. So how would we have figured out this setup using the indicator? Well, we can see straight away the resistance also there on the indicator the same. Okay, the support as well, perhaps there, open to interpretation, but I'd say I'd be quite comfortable with that level of support. Okay, and then you can see the most important aspect, I'd say, would be the divergence. Okay, and we have the bearish divergence here on the indicator, so that means that the indicator is making these lower highs. I do have many videos on divergence you can check out, but let me just remove that line and that line. But divergence, when the indicator is making these lower highs, it suggests a bearish market sentiment, and you can see that was a clue before this move even happened. Okay, so around here we would have been anticipating this breakout scenario. So that's just extra confirmation for us there. Okay, the fact that the volume indicator is high up as well suggests that it could be a good time to sell, because we could be selling at a high point rather than, you know, for example, when the price drops down here, you don't really want to sell at the bottom of that move and the indicator is down here. So that could prevent you, you know, keep you out of trouble basically. If you do miss these early entries, what you can do is you can just wait for a pullback. Okay, so you see like this pullback here, and price has a pullback, and then just trade the breakout of the pullback. There, you can see price in that zone, consolidation zone. Just zoom in for you there. Price consolidating here and a breakout to the downside. Support becomes resistance and a continuation of the trend. Okay. Yeah, and that's it really. It's simple as that. Just look for the divergence. You can use the indicator for support and resistance, and it can help you avoid, you know, selling when price is too low or buying when price is too high. Okay, and yeah, as I said, you can use it for support and resistance. So you can draw your support line there, and then we can just mark this part when it crosses the line there. Well, it ties in nicely with the support on our chart. It's just a different way to draw it, but it's just more or less confirmation of that trade there. Again, here have your support line, so we just mark it up on the crossover around here somewhere. Okay, which is a good time to get in on this breakout. It's actually NFP non-farms payroll first Friday of the month candle there. I do have a video on the NFP strategy you might want to check out, but that could also, we could use that momentum to hop in on downtrend again, market making these lower highs. Okay, you've got this wedge formation or diamond pattern if you prefer there. Bearish price action, inverted hammers, you've got bearish hanging man there, lots of bearish signals. One thing we wouldn't do in this instance, we'd look at this and we wouldn't be taking long trades. Okay, you can see the bearish divergence clearly here. The indicator is falling down. Okay, we've got market making lower highs. It's an obvious downtrend, so we wouldn't be looking to place buy trades. If you're late to the party, you know, just look for your support levels and a breakout. You can see, in fact, this support level here holds up well, but then actually becomes resistance here and here. So that's just good confirmation whether you want to trade on the initial breakout or the pullback here. Again, market making these lower highs, wedge formation as well. Okay. And that was pretty obvious on the indicator there as well. If you just want to use that to draw your support, you can see the pullback there. Okay, so that's in a downwards trend. Let's look for, okay, we have a nice uptrend here. How do we know that? Well, we can simply see the market making these higher lows. Okay, the indicator is coming away from the bottom here, showing bullish divergence to the upside. Okay, probably be looking around here somewhere, I would say, to enter on this. Probably here after this big candle, you just want to wait for more of a pullback. You can see it's quite a significant pullback. We do have this level of resistance in play now, so you would be trading against the resistance here, which is perhaps a more aggressive trade, but nonetheless it's still one that would have paid off. You know, we're buying because we're in an uptrend. We're going to look for resistance and we're going to trade a breakout and resistance. Market is making higher lows. Okay, you can see there's actually a breakout candle there. So traders are watching these levels. Okay, you've got a 3 inside up candlestick pattern this time, bearish candle, bullish, bullish. Okay, so the signs were there. Okay, if we would have got in, it's a decent trade there. Over 250 pips profit potential. Again, stop loss just below the low. We can use a trailing stop on the way up just to lock in profits. Alternatively, you can wait for price to actually pass this previous strong resistance level, and then arguably this resistance level as well. So in that case, we'd wait for this pullback here, and you can see a big breakout candle. Obviously, traders were anticipating that move will happen. And the good thing about that trade there is, again, the indicator's got the bullish divergence, whereas if we zoom out, you can see here it was more or less a choppy market, which you can see from looking at the chart yourself. Okay, and once we're in this nice bullish momentum, okay, higher lows, we're in an uptrend. So what do? We wait for a pullback. There's your pullback. What else do? We draw a resistance, breakout candle, pullback, breakout candle. No coincidence that there are breakouts around these resistance levels in line with the overall trend. And another one here, but you want to be cautious by this point that you don't end up buying too high. And as I said, this indicator can help keep you out of trouble. You see now we've got bearish divergence. The indicator is quite high up, so there may be a sign to perhaps avoid buying at the high around here. You ideally want to get in as early as possible. Some may argue, once we've seen this bullish divergence down here, okay, we could have actually been primed to enter perhaps on this breakout down here. Okay, that would have been an earlier aggressive trade, but a very, very good trade there for over 350 odd pips. Again, you can close part of the position on the way up if you want to bank some pips and just let the rest run. But again, you could have had your resistance line based off of the indicator as well. Just wait for it to cross. Cross is there. It's actually slightly before, but could be double confirmation. Can just help you draw maybe more accurately your resistance lines. If you're not too sure where to draw them on the chart. Also got a W pattern formation, a breakout to the upside there as well. Lots of bullish signals. Okay, so there you go. That is a basic strategy using the volume imbalance indicator. As I said, you can use on any trading instrument and any chart time frame. Make sure you've got good discipline, have a trading plan and stick to it. Don't force trades that aren't there. There's so many instruments to choose from. You don't need to. And personally, I wouldn't stress myself out trying to scalp a few pips on the 1 minute and 5 minute charts. You know, it's just you're going to end up paying your broker more in terms of spreads and commissions, potentially get slipped out of trades the more you re-enter. Also, the later you re-enter into the more you re-enter, into a trend, the more chance you have of getting the entry wrong, which is why I prefer longer term trades where you can just quite easily identify support, resistance and trend lines and just remove some of the noise from the lower term chart time frames. It also means less time chart watching, which is great. Don't need to pull our hair out trying to trade the 1 minute or 5 minute charts all day long. If you do miss opportunities, provided the market's not too oversold, you will get other opportunities to enter. Just remember, in line with the trend, trading on breakouts, with good money management, not selling too low, not buying too high. I think that way you can have a good, strong, solid trading strategy. Make sure you demo trade until you become familiar with your strategy that you're using and start turning good results. Okay, hopefully you found something useful on this video. I do appreciate you watching. If you can like and subscribe, that'd be great. And I hope to catch you on the next one. Take care.